Good afternoon, traders and investors. Will back here with another one coming to you live after Thursday on the close here. So hope you guys have had a good week of trading so far. We are taking a look at the markets today. A nice green here today, recovery from yesterday where the bears kind of surprised the bulls with a very late afternoon technical sell-off off of some overbought levels, guys. So in today's video, we are going to cover a bit of the GDP numbers that we got today as well as the jobless claims to see the state of the economy. Are we going to have a recession? Are we not? We're going to take a look at the data and see what it says. Also, we have some Nike earnings for you guys. Nike getting pretty much destroyed after the close here. And we're going to also look at our major indexes, of course, our major tech names as well. And lastly, a glimpse into my portfolio, see how we're finishing the week off here. So without further ado, guys, let's get right into the video. Now, SPY up 0.95% for the day. QQQ 1.16%, edging close to the all-time highs is SPY right now. QQQ right back to the all-time highs already here, guys. Take a look at the heat map. You'll see that it was a very broad market recovery after yesterday's total sell-off of pretty much all indexes here on the day yesterday, guys. Yesterday wasn't able to make a video. It was my birthday, so I was out with a couple of friends celebrating. Hope you can forgive me for that, but we're back today for more. So as you can see, guys, very, very broad market support here. Very, very beautiful day indeed of recovery here ever since the morning data came out. And on the one-day relative, you'll see that everything pretty much in the green here. On the 1 week, however, we do have a few industries that are mixed. Now, very good outperformance by technology and communication services here with some cyclicals as well, but real estate and utilities down, however. So that is pretty much your glimpse into the market. Before we get into more, let us view some of the data that came out this morning. So today we got two things, guys. We got the GDP numbers and we got some continued revisions to jobless claims. So GDP was actually coming in a slight bit lower here. So US labor market resilience keeps economy afloat as year ends. This came out pretty much fresh this morning, 8:30 a.m. Eastern here. So you can see here, guys, that although the jobless claims did uptick ever so slightly by about 2,000 jobs here, the GDP was fairly strong and robust. So it revised down. So they actually had a down print on GDP. The expectation was for 5.2% year over year annual growth, and they revised it down to 4.9% after the data came out here. So signs of a little bit of a cooling economy, but nothing to worry about, guys. This is very, very, very strong. The Fed's target pretty much to have a growing economy is 1.8% year over year on GDP. So you can see that we're still well above that territory and very far off anything resembling a recession whatsoever. Very, very healthy GDP numbers as a whole. So this also plays into the Fed's cards as well, to where they're kind of trying to thread the needle and have the infamous soft landing here. So that just means that as the economy is healthy and while the employment market is fairly tight and healthy, we will not be going into a meaningful recession, guys. They are doing a very, very good job here of threading the needle towards their soft landing goal. And as long as the data doesn't change here, guys, my tune will not change as well. I do not believe that we are in for a deep, long recession next year. We may get a bit of a mild one as the Fed tapers back, cuts back on interest rates ever so slightly. The interest effects, the high rate effects may have a bit of a lag and may affect markets into Q1 and Q2. But for the most part, when they start cutting rates potentially into the mid-year, I do believe that they will counterbalance very, very nicely. So I do believe next year will be a very, very good year, potentially a bit of volatility in the beginning 2 quarters. But after that, I do believe that it is smooth sailing and the resumption of a bull market for the next couple of years as interest rates continue to come down, inflation comes back to target. And as you can see, the jobs market as well, guys, the jobs market is very, very healthy. This is the unemployment rate, right? We got a little bit of an indication on that in November. We'll see how the December print comes out, but you can see it's back to 3.7, guys. 3.7 is pretty much pre-pandemic levels all the way back here, 2019 and pre-2020, before the entire pandemic years, right? You can see that we are right back in line with expectations. So the jobs market is healthy, GDP numbers is healthy. That's why I don't believe that we're in for a meaningful recession. Until the data changes, that is my current narrative. So before we get into our technical analysis here, guys, let's go over some Nike earnings, shall we? And Nike, you guys know that I've been touting Nike a lot on the channel but it is a recovery story play. You can see they're down about 11% in the after hours here as they had a bit of soft guidance for 2024. That's been the name of the game. Even when you do have companies pull in a double beat like they did, well, they missed ever so tinily on revenue here, but we'll say that they came in pretty much in line with revenue, but they did have a very, very nice beat on earnings, mostly due to some cost-cutting effects that have come into play ever since this past quarter for Nike, after they've been dealing with a bit of inventory struggle. So you can see Nike here had a beautiful rally off of the lows that were set pretty much in low of October here. $90 ran all the way up to 120. That was a very, very healthy gain, guys, about 37% rally. And now pulling back about 11% in the after hours, pretty much coming back to our big area of congestion here. I've always said this on the channel for a while. 110 down to pretty much 105 is going to be a nice entry point for some Nike. Obviously, this is during a bit of a macro turmoil environment, so you may not get the $90 pricing anymore, but a very, very decent dip for Nike indeed. So what exactly happened on the earnings for them to drop 11%? We're going to take a look right away. Nike sinks 10% after it slashes sales outlook, unveils $2 billion in cost cuts. So a bit of a positive here at the end in terms of the cost cuts, but negative in terms of their revenue, guys. The revenue forecast for the remaining end of the year is not supposed to be too hot. So you'll see right here the headlines. Nike says it plans to cut $2 billion in costs over the next 3 years. The sneaker giant also cut its revenue outlook for the fiscal year. Nike fell short of Wall Street's sales estimates for the second quarter in a row at this point. So even though they had very, very decent EPS beat here, guys, you can see they beat by about 23%. It's really the revenue aspect that is hurting this company. And that is largely due to the fact that their sales in China are still not on par with what they should be currently, because China is going through a bit of a downturn right now, and the fact that they have a lot of inventory still left to liquidate. About $8 billion in inventory still remaining to be liquidated. And obviously, when they have to discount that inventory that they've built up after the supply chain issues, well, they have to liquidate it at lower prices, and that means a bit lower margins for the company. So that's pretty much the gist of why they are doing pretty bad in the after hours. Nike now expects full year reported revenue to grow approximately 1% only, compared to a prior outlook of up mid-single digits. So a bit of a revenue slide here in the guidance. In the current quarter, it expects reported revenue to be slightly negative as it laps tough prior year comparisons, and sales to be up low single digits in the fourth quarter. And here's the metrics here from the CFO himself. This new outlook reflects increased macro headwinds, particularly in Greater China and EMEA, that's Europe, Middle East, and Asia. Adjusted digital growth plans based on recent digital traffic, softness, and higher marketplace promotions, inventory management, lifecycle management of key product franchises, and a stronger US dollar that has negatively impacted second half reported revenue versus 90 days ago, directly from the CFO. The company still expects to grow gross margins to expand between 1.4 to 1.6 percentage points. Excluding restructuring changes, it expects to deliver on its full year earnings outlook. So here is the key. Even though revenue is declining, guys, they were able to boost their operating margins ever so slightly, and that's because they've been doing a big cost-cutting plan that started last quarter. So you can see here, guys, as we look ahead to a softer second half revenue outlook, we remain focused on strong gross margin execution and disciplined cost management. These two are hand in hand. They will only maintain strong gross margin execution if they have disciplined cost management at this point here, guys. Big restructuring plan. The plan will cost the company $400 million to $450 million in pre-tax restructuring charges that will largely come to fruition in Nike's current quarter here. So that is the gist of the report, guys, pretty much, right? So the focus is on margins. You can see the headline right down here. They did have an increase in margins from 44% to 44.6%, which was slightly ahead. And now this time last year, Nike's inventory were up a staggering 43%. And the retailer was in the midst of an aggressive liquidation strategy to clear out old styles and make ways for new ones. During the quarter, inventories were down 14%. So I had it pulled up here, guys, in terms of Nike's inventories. You can see right down here, if we pull it up in the actual earnings per se, on the balance sheet, you can see the inventory line right here. Let me blow it up if that's too small for you guys. My apologies. So inventories, this line right here, you can see that as of 2022, the same quarter last year, inventories were about $9.3 billion, and now they're down to about $8. So still $8 billion worth of inventories on their balance sheet. They will have to get through that inventory, guys. So Nike still a recovery story. I do like the stock currently at its current price right in the 109 level, 109, 110, all the way down to pretty much 105 is a very, very good technical area for me to be buying this stock personally. Nike still currently off of its all-time highs by a ton, guys, still about 38% off of the all-time highs. They are expecting to grow EPS over the next couple of years, and that's going to really, really bring this company forward. So on a forward basis here, let's say you take end of 2024 earnings. End of 2024 earnings is $4.38. Let's say we take the current share price 109 divided by your 4.38. That gives you a current price to earnings ratio for the end of next year for Nike of about 25, which is not that high for Nike per se. So decent growth perspective from Nike, but it is a recovery story. But Nike is one of the companies that I do believe in whenever it becomes a question of recovery story, guys. This is one of the best brands in the world, and I do believe that their management is going to execute on cost cutting. I do believe that they will be able to liquidate the remainder of their inventory, may take a few quarters still. And then when China does have its own recovery story, keep an eye on Nike, guys. So Nike is in the current bottoming out process of a big cyclical drawdown here. And that's where you want to kind of find these companies and start building positions, is when they're making it out of that cyclical drawdown. So that's pretty much everything that I had for you guys for Nike. I do like this stock. My pure sweet spot is down from 100 all the way to $80. But in the current macro environment, guys, with the way the markets have been performing, unless we get a severe drawdown in the indexes, I don't believe that Nike is going to revisit the sub $100, at least not for the foreseeable future, unless the macro changes. So with that being said, guys, let's get into our technical analysis here right away on the major indexes. So SPY pretty much up on the day here after having a mega down day yesterday. So you can see, guys, this sell-off yesterday was fairly brutal, coming in pretty much 1, 2 o'clock, selling off all day. But the bears had one job. They had to set the 4-hour downtrend. If you set the 4-hour downtrend in motion, daily consolidation was going to be underway. But the bears have failed to set the 4-hour downtrend. They gave the bulls the golden opportunity, and the bulls took it. Bulls recapturing your 4-hour uptrend at this point, recapturing the 1-hour uptrend as well. So it remains to be seen. Will the bears be able to roll the bulls over, or will the bulls just continue to march forward? Keep an eye, guys. I've been saying this for the longest time. Your 12 EMA on the daily chart is the one to watch. You'll see the bears were not able to get to your 12 EMA on yesterday's consolidation. So we will see how it goes. But as of now, bulls recapturing your short-term control here on the 4-hour time frame. They lost the short-term moving averages here. I told you to keep an eye on the 12 EMA on the 4-hour as well for short-term trend changes. The bears had it, but unable to follow through, which has been the story for the bears over the course of this last rally here for the last 2 months. So SPY still looking fairly good here. This is the dividend anomaly, so we'll take it on the futures here, guys. SPY currently still hunting for your daily higher low. This daily higher low is not yet set, in my opinion, to here. Going to need a bit more confirmation from the bulls in terms of really opening hard tomorrow. If we do get follow through on this 4-hour trend, well, we'll be able to say that our daily higher low is set. And then it becomes a question, can the bulls continue the daily uptrend and march past the all-time highs? Or will they potentially roll over, set a daily downtrend, and we may be due for a bit of weekly consolidation? Either case, the bulls are looking extremely healthy at this point, guys. Moving down to QQQ, same principle here, guys, right? So we're looking for the daily higher low. The bears had a chance at it yesterday, You can see unable to set the 4-hour downtrend, giving it back to the bulls. Bulls able to recapture that 4-hour uptrend pretty much with the after hours trading and intraday trading here. 1-hour uptrend is beautifully set as well. We'll need a bit more follow through on tomorrow morning here just to be sure that your daily higher low is set right here, 403.29. As of still currently, the bears do still have a slight chance as long as we don't eclipse yesterday's high pretty much. So we are just looking for the daily higher low. Even if we continue consolidation, guys, we've been expecting it. I've been saying this for the past 2 weeks on the channel. Any move down is just for a daily higher low, anything pretty much above 383.50. Same thing for SPY, daily higher low, future price appreciation here. Keep an eye on your 12 EMA. That's been seeming to be the best area that the bulls are able to play defense in. And on the weekly, guys, everything's looking very, very healthy on QQQ as well, right? Weekly uptrend is in motion, currently confirmed, and trading slightly under your all-time high, which is this yellow line right here. We hit a previous all-time high yesterday and into the close on Wednesday here, but currently trading under it right now. So very, very close indeed. Bulls in full control. XLF financials here, right? So financials do, as a matter of fact, have a daily downtrend in motion, but it's also tiny right here, right? So daily downtrend is set in motion by XLF bulls. That means that we are in a bit of weekly consolidation, but the bulls have a chance to recapture because the daily downtrend is really just coming into this 12 EMA beautifully and also coming into this area of previous resistance. This big red box is our previous resistance. And I told you guys a lot of times, right, ever since we cracked it, if the bulls are able to come back and sit on this area as support, I do believe that the bears are going to very much struggle getting through it here. We have a good chance of using this area as support for a potential future leg up here into 2024. And that is most likely going to be what happens unless the general macro changes here. So nice little comeback, daily downtrend, touches the 12 EMA. Now it's up to the bulls to say if they want to play defense, recapture these short-term timeframes here, or if we may just be due for a bit more of daily consolidation down into the 37, 36 zone. In my opportunity, bulls are going to put up a heck of a big defense here, being able to use this entire area now as support. So no real red flags as of yet, guys. XLF bulls just holding up perfectly. XLV Healthcare down as well. XLV Healthcare with yesterday's drop set the daily downtrend as well. So we were looking for the daily higher low for bull continuation, but the bears were able to roll it over for just one day. We will see if you get a break of pretty much Tuesday's high, right? That will have nullified the bears' chance at a further daily downtrend here. So the bulls playing great defense of this 12 EMA. You see we dropped below it and now we're above it again today here. So 12 EMA has been the remaining defense here for the bulls on pretty much every single index thus far, and nice to see them recovering here. The bears had the 4-hour downtrend in motion here, but now the bulls are looking to engulf the move, potentially reset the 4-hour trend and pretty much reset the daily trend to the upside. Daily downtrend just meant that we were in for a bit of weekly consolidation. We won't even potentially get one weekly candle out of it here, guys. So very good defense by the bulls indeed. But even if we do continue to pull back even further here, guys, keep an eye your lower bound here, exactly where we reacted to yesterday, 132.75, because this has been a big area here of congestion for the bulls pretty much. And as we stay range bound, I would like to see the bulls remain range bound within this area. If ever we lose this area, keep an eye 131.50, guys. The confluence of your moving averages is probably going to be a nice area of support. You have previous resistance up here, which will be acting as support on the horizontal factor as well. So XLV Healthcare bulls not looking too bad at all, guys. Very decent recovery of this daily downtrend here that was set by the bears ever so slightly. Now we are potentially looking to move past Tuesday's high. And if we move past Tuesday's high, the bears lose the daily downtrend and we are just continuing upward motion here, and your weekly consolidation will not be in effect yet. So now IWM Russell just struggling here at the top ever so slightly here. So big sell off yesterday and now recover intraday. Very nice recovery here, 1.7% to the upside. Still trapped in this upper bound of resistance here, guys. So I'll remind you, resistance stays all the way put to about 201.50, right? Is the upper bound of this resistance area. We are still looking to maintain that area as a whole. So now bulls, if bulls lose yesterday's low, we can potentially set up for a little bit of a daily downtrend here. Daily downtrend is no problem at all. That would just be a bit of weekly consolidation for the bulls here. And the bulls have tons and tons of space, guys. Anything pretty much above 162.20, right? It's just for a weekly higher low for further price appreciation, guys. So keep an eye on that for IWM. IWM, really no red flags yet. This consolidation has been beautiful. And if I didn't mention it, guys, look at this one day, what one day did for the RSI, right? Was overbought. Now it's back within its average bounds. QQQ, same thing, was overbought, right? Back within its bounds. XLF, overbought, back within its bounds. One day of sell-off, guys, on everything pretty much. Just reset everything beautifully. XLV, no longer overbought as well. And now IWM with a bit more space to work with here on the RSI as well. So I would not be surprised here, guys, if they use that momentum here and use this space on the RSI to really start eclipsing some of our all-time highs. SPY is super close, this yellow line right here. So about 1.25% to the all-time highs. QQQ is right there. And the other one's not that close at all. So IWM looking fairly good as well. Dow Jones here. Dow Jones pulling back ever so slightly yesterday, but recouping a very decent amount today here, up 0.87%. And I was saying, guys, any single move down is looking for a daily higher low. And if you're looking for a daily higher low after this move, right, anything above 36,000 is just looking for a daily higher low. Keep an eye on these areas right here, right? 36,800 all the way down to 36,400. That is your previous all-time high area, was resistance for a while. Bulls should be able to use it as support, right? So just keep an eye on that. If for ever which reason we continue downtrending potentially into next week with some potential profit taking, end of year profit taking, keep an eye on this area, guys. This would be the most likely area where the bulls are going to put up a fight. Everything's still looking very, very, very good here, guys. Just looking for the daily higher low, anything above here. Bulls looking very, very healthy on the weekly as well. Any weekly pullback here is just going to be for a weekly higher low for further consolidation before another beautiful leg up here into Q1 of next year. So everything looking very good on the indexes here, guys. Let's move right down to our tech stocks. So moving into Apple here, Apple down ever so slightly on the day, but not that big of a deal here, guys, right? So Apple setting a bit of a daily downtrend here. That is no problem at all, right? It's similar to the move that happened right here. Yes, technically it's a daily downtrend, but this is also a bull flag here, guys. When you have a nice little push like this, more than sideways, pretty much sideways consolidation, right? Defense of the 12 EMA, it just screams pretty much bull flag to me. On the weekly time frame as well, even if the bears were to roll this over a bit more into a more severe daily downtrend, losing this 12 EMA right here, pushing back down into the 190 area, that's okay, guys. The bulls have space, right? Weekly uptrend is confirmed, and we're just looking for a weekly higher low, anything above 188 pretty much, looking for that weekly higher low to pretty much give bulls another chance of accumulation before another leg up here. So bulls still struggling with your all-time high region. Apple not able to break it, especially with the news affecting it as of recently, having to pull their Apple Watches from the market. That was a bit of a negative catalyst here all the way on Monday, and it's kind of been plaguing Apple all week. So Apple bulls still looking fairly healthy here. Line in the sand is 191.81 here, guys. Lose that, and your weekly consolidation is definitely going to be underway. And then your next line in the sand, guys, the level the bulls can't lose. If they do, they'll sacrifice the weekly uptrend here. Is going to be 187.89, right? But the bulls could just come down a little bit to pretty much a little double bottom and then resume as well. Meta has done that a bunch of times in this past year, so wouldn't be surprised if Apple could do the same things. But as of now, no real red flags. Now moving on to AMD. AMD with a nice little day of recovery here, 3.28%. So AMD was always looking for the daily higher low for further price expansion. Pretty sure that that is set with yesterday's trading here. 135.26 is going to be the area to watch. Lose that, and the bulls have lost the daily uptrend here. The bears will set the daily downtrend. Daily downtrend would just mean that your weekly consolidation is underway. And look at this space, guys. Anything above 116.36 is just looking for a weekly higher low for a future breakout here into Q1 of next year. The pullback zone, as I've been saying, guys, 132 all the way down to 128. If ever we pull back there, could be a very juicy buying opportunity for the breakout or retest of the zone, and then further breakout towards the all-time highs. AMD looking very, very, very healthy. So just keep an eye on this area here. But as of now, bulls looking like they just want to set the higher low with yesterday's trading and potentially start moving higher right away. So we'll see how this whole technical pattern plays out. Either way, I'm fine with it. If it does skyrocket north, perfect. I still have some AMD shares. If it does pull back, I will be adding some shares in the trading account for a potential leg up higher. AMD looking very good. Amazon trying to fulfill its breakout here still. So Amazon with the nice move up here. Yesterday brought it down a little bit, looking for the daily higher low. I was saying, guys, anything above 143.81, looking for the daily higher low for the next move up. I was expecting a potential touch and then go of this whole previous region, but the bears not able to bring it down, not even able to come down and touch the 12 EMA. So Amazon looking very, very healthy indeed, guys. This was the weekly breakout pattern, I'll remind you, right? So weekly uptrend is now set. We are into leg number 2 of your most recent weekly uptrend here. Amazon currently targeting 164 to 170 as resistance is going to be the next level for the bulls to really hit. Weekly trend, everything is looking very healthy. Daily is looking excessively healthy as well. Yesterday's higher low, right, is going to be key. If they lose that, they could set a temporary little daily downtrend here. That would be fine. Have a little bit of space for weekly consolidation, potentially a weekly touch and go. But in either case, guys, Amazon is looking excessively bullish as they have completed the monthly breakout as well. So all higher timeframes, guys, on everything are still extremely bullish. It's just short-term daily consolidation that we've been expecting on a few of these names for a while. Now let's move down to Google. So Google bulls, guys, Google bulls pulling ahead almost $142 here today, 1.5% to the upside here. So Google bulls fulfilling the daily uptrend. That is what we were looking for, guys. The two scenarios were either going to be a tightening range with a bullish lean or a straight bull breakout after the bulls setting the higher low here, 131.13, compared to this low down here, 129.20. Well, the bulls have done it now, setting the daily uptrend, and now back to your previous 52-week high. So everything looking very healthy on the daily here, guys. Any pullback is going to be for a daily higher low above 131.15, looking to continue the daily uptrend. Keep an eye. This whole area of resistance is now now going to be support. This whole about 140 pocket, 140, 139 pocket right here. Decent little area that the bulls can use for some support if ever we pull back before a future daily leg up. On the weekly, everything's looking extremely good here, guys. The bulls have now set the weekly uptrend in motion. After having lost it back here, the bulls have now reset the weekly uptrend. And I've reminded you guys a couple times on the channel, this was an inverse head and shoulders pattern formation. And we are starting to break out of it now. Upside targets for Google right now at this point, guys, are going to be the 145 mark. And then we're pretty much challenging the all-time highs at the 150, 152. So not that much resistance. And Google's still trading at a relatively attractive value here on a forward basis. They're trading at about a 21 price to earnings for end of 2024. Looking very good on a technical basis as well. If the month of December closes like this too, well, you have your monthly uptrend set as well. Something that we have not had since all the way back here, 2020 and 2021. Lost the monthly uptrend all the way down here. Now we are finally in the measure of recapturing that as well. So full time frame control by Google bulls at this point. Now moving down to Meta. Meta looking great as well. Another update for Meta here, up 1.38%, right? So daily uptrend is very, very clearly in motion at this point, right? Any move down below at this point is going to be for a higher low, anything above 328.73, looking for your daily higher low for further daily uptrend continuation. If we do pull back, guys, very, very simple technical analysis, target your previous area of resistance here. That will be your new area of support. And look over here, we have Confluence, our 12 EMA, and the pretty much horizontal previous resistance, which is now support. 341, 342 is going to be your area of confluence for a potential pullback by the bulls if they run out of steam soon. Daily is not overbought yet. And on the weekly, guys, Meta is looking absolutely amazing. Weekly uptrend is continuing. I mean, it started all the way back here, right? Weekly uptrend, beautiful, beautiful, beautiful weekly uptrend in motion right now. No red flags whatsoever. And you do have a monthly uptrend as well. So no red flags whatsoever on Meta. Meta continues to be excessively bullish, in my opinion. And your upside targets for resistance, once we clear this area right here, which we're pretty much clearing right now, it's pretty much all-time highs, guys. 383 is the next area now that we've moved through this area of congestion. Top area of this area of congestion was 353, and we're now trading above that 354. So bulls, next stop, all-time highs resistance. Now, Microsoft doing very, very good as well, protecting the tightening range here, right? And if the rest of the market continues with its bullish lean, this will break bullish as well. Very, very tight. Reminds me of Tesla when it was trading between about 245 and 230, right? Very tight range for Microsoft, this time between 377 and your lower bound here, 363. So we're looking for the clean break of one of the two areas. The lean is currently bullish here, guys. Only because the rest of the market, but also because the bulls control the higher time frames here, guys, right? Weekly uptrend, we're looking for the weekly higher low for weekly continuation here, right? So the key area is 362. Cannot lose that here, guys, right? If you lose that here, even though these couple weeks have been sideways, you just are due for more weekly consolidation. Microsoft, you guys might know my levels, 355 down to about 340 would be my price targets to acquire more Microsoft shares. Remains to be seen if we'll get down all the way that far. But the way the markets are moving, I wouldn't be surprised if Microsoft just really eclipses the high of this range, 377, and pretty much resets a daily uptrend in motion at that point. So we keep a close eye on Microsoft for now. If we move down, no worries at all. Just remember the weekly bulls are still in full control at this point. Would just be a healthy weekly correction at this point, right? Healthy weekly consolidation. And the monthly uptrend is fully bullish at this point as well. So bulls in control of everything. Just need to recapture this series of daily higher highs and daily higher lows. So watch that 377 target to the upside. Now moving on to NVIDIA. NVIDIA looking decent as well here, guys. Obviously a bit shy off the all-time highs, but NVIDIA, what we're looking for, we were just looking for a daily higher low for further price appreciation. And yesterday's trading does seem to be that daily higher low. 481, right? 481 is going to be the level. If we move up here and smash that, well, your daily consolidation, daily downtrend will be underway. At that point, you zoom out to the weekly here and you'll see that the weekly level here, guys, is pretty tight. The weekly level is 452.35. The bulls cannot lose that area or you would lose the weekly uptrend that they've been working so hard to maintain at this point, right? Defense of this 12 EMA for the past about 2 months at this point, right? So very, very good defense by the bulls here. I need to see the bulls hold that 450 area, but it does seem that they are very, very healthy at this point here, rejecting nicely from our moving averages. Semiconductors are doing good as a whole, so I don't expect anything bad to happen with NVIDIA. NVIDIA doesn't have earnings for a while either, so we're still just looking for our break of our previous all-time highs at this point, right? Could be argued that this whole pattern right here is potentially a very big cup and handle formation on the daily here. So we're going to see if the bulls can really smash through the previous all-time highs here. As of now, guys, no real red flags. The red flags really arrive if we start dipping down to this 450 area here, because that is going to be your weekly level. But as of now, guys, weekly leg is still in motion here as the bulls maintain control here of this daily uptrend currently. Now moving down to our couple last ones here. Tesla up 3% on the day here today, guys. Yesterday having a very bad day. Top to bottom on Tesla, guys, was like 5% yesterday, almost 5%. So heck of a sell-off yesterday, coming right down into our area of support. And that's what we were targeting. Ever since breaking this area, I said I wouldn't be surprised if we do a breakout, retest of this area before potentially another leg higher. Seems to be exactly what the market is doing for Tesla here. So coming back nicely, tagging our upper bound of our resistance, previous resistance area, tagging our 12 EMA, this yellow line right here, the moving average, and now potentially proceeding to moving higher, right? Break of 259.47 would be the further confirmation of this beautiful daily uptrend that the bulls have created here over the past couple of weeks. I'll remind you on the weekly as well, weekly uptrend is confirmed. This was a weekly bull flag sideways consolidation, and now move into the weekly uptrend. Your uphead resistance target's currently sitting at about 268. So I wouldn't be surprised if Tesla is able to go up there and get that here in the next couple of weeks, as long as the market continues to show bullish signs as a whole and continues these weekly moves higher here, guys. I would be a bit not worried, but I would be a bit concerned here if Tesla just re-dips into this range here after having a beautiful, beautiful weekly breakout. You don't really want to see the look above and then break down below again here. That would just mean we're in for extended consolidation here, potentially tightening up of this entire range here, 235 to about 245 here. That would be the pretty much one of the bear case scenarios for Tesla at this point, right? The bull case, well, the bulls are in full control here. Nice daily uptrend, nice weekly uptrend as well. And on the monthly time frame, you guys have nothing to worry about. This as well is a beautiful, beautiful, beautiful monthly uptrend in motion currently. So all signs point to bullish continuation at this point on Tesla. We will continue to monitor it closely. Now moving on to Palantir. Palantir here, right? Holding steady here, guys. I cannot stress enough how important the 1715 down to 17 areas. Very crucial for Palantir bulls to protect this, right? We were trying to reset up for a daily uptrend, but now the bulls have pretty much lost this, right? So the bears are really, really trying to hammer this thing down hard, but they're having a tough job. Why? Because this whole area, as I've reminded you, previous weekly resistance, and now it is acting as support. So the $18 to $17 channel is a very solid channel for Palantir bulls at this point. On the weekly, we are still just looking for a weekly higher low. Anything above 1456 is just looking for that weekly higher low for further bullish continuation to the upside as we get consolidation here. This is the line in the sand that the bulls need to protect to keep this daily consolidation healthy, right? If we lose that, it's not a huge deal, but it starts to get a bit worrisome, guys. Why? Because we're really approaching crucial levels on the fibs, right? You don't want to see the bears take back over 62% of the move, and 62% is this line right here. And you can see we've kind of touched it 3 times in the past over the past couple of weeks here. So need to see the bulls maintain. This is the golden ratio, otherwise known as the last attempt here. The last area where the bulls can potentially say, we are still good for a V-shaped recovery back to the highs. Anything lower than that, and your expected move becomes at best for the bulls a tightening range, and at worst for the bulls a potential weekly downtrend here. So as of now, with the bullish lean on the market, I am still bullish Palantir. I still do believe 18 to 17 is a decent area to be picking them up. So we'll monitor this level closely here, guys, but I need them to hold these lows here, and I just explained why in terms of a weekly potential expected move back to the highs. And now lastly, PayPal. PayPal doing fairly decent here, you guys, today. Yesterday, they did not drop too much with the rest of the market. PayPal pretty much tightening up after this nice 2-day move to the upside, consolidation sideways, right? 2 days up, consolidation sideways, 2 days up, consolidation roughly sideways, 2 days up, consolidation sideways. PayPal is doing exactly the same thing, but it's nice that they're able to hold above this whole area that we were targeting previously, right? This big area of congestion, which is pretty much 50, let's call it 57.5 all the way to $60 pretty much. That is the area that the bulls need to absolutely hold, in my opinion. As of now, looking fairly good. This is looking like a bull flag. Any positive current any positive continued momentum by the bulls should be able to bring them back up here into the 65, 66 area. That would be perfect for the finishing of the completion rather of this weekly engulfing move, right? So we'd like to see the weekly bulls put in a weekly engulfing move and then potentially set the weekly higher low and start moving above, setting a beautiful weekly engulfing uptrend. You saw they had the weekly uptrend back here, but they never got above our previous move right here. We just flushed back down here. So I really hate for that to happen to PayPal again, to where we're unable to really reverse the cycle of higher highs and higher lows on the weekly for an extended period of time, which would also not allow us to complete a monthly cycle reversion as well. So we're looking for the long-term time frame reversals here on PayPal. So far, so good on the short time frames here. Bulls are still in control here, guys. So the line in the sand level for me, guys, I need them to stay above this 60 to 57.50 area of support currently, right? The line in the sand is 57.50 on the dot, but really need to be maintaining above this whole area of congestion if you want the bulls to remain healthy. As of now, guys, though, still remain healthy, guys. And even on the 4 hour, you can see beautiful tightening range here on the 4 hour time frame. Wouldn't be surprised here if PayPal is poised for a move higher to the upper resistance bound here right in the $65 range. That's pretty much everything I had for you guys here on the technicals. Now let's take a quick look at my portfolio. So guys, the portfolio continues to perform very well here. You can see on the year, we're up currently 70.42% year to date. In relation to the SPY here, SPY is trading about 23% here in relation to year to date gains pretty much. So that's very, very good performance by the SPY on a year to date, but we're doing significantly better here. So very, very good performance. We'll try, to close out the year very, very strong. And I do believe that we'll be able to etch out a few more percentage points here from the market as well. And in relation to QQQ, we are still beating the NASDAQ here. NASDAQ pretty much up 42% on the year, and we're all the way up at 70. So a good little 1.5, 1.6, 1.7x versus the NASDAQ as well without holding any big tech stocks for long periods of time. So very, very good performance by me on running the wheel strategy for the year. And in terms of the positions here, guys, you can see that nothing pretty much has changed. So still have the Palantir options open here. So we'll see if Palantir closes above or below 17.5 and $18. If they close below 18, I get assigned 200 shares. If they close below 17.5, well, I get assigned all 800 shares of Palantir here. So we'll see how that closes tomorrow. Would like to own some Palantir moving into potential rally mode here. Baba, you'll see that I wrote 72 puts here early in the week. They're pretty much worthless, guys. Going to let them run to nothing tomorrow. So nice little pocket here on Baba. Going to bring down a bit my average cost here on the 100 assigned shares that I did have prior to the past 2 weeks ago. CELH falling through on my own strategy again here, guys. I mentioned that CLH was in a beautiful area for a potential pickup, and that remains true here, guys. Pretty much 50 all the way down to $45 is my sweet spot for this company. Very, very beautiful area of technical support right here. So I've been writing this 48.33 strike for the past few weeks, and it's been playing out fairly decently for me again. And now CLH, you can see pretty much they are currently trading above 48.33, currently closing in the $50 range as of today. So those, unless the market truly falls apart yesterday, should end worthless. We're just going to pocket this premium as well here. In terms of Google wrote the 140 calls, right? A couple days ago, we wrote the 140 calls. They smashed through the 140, so I'm pretty happy with that here, guys. So may potentially be called away. We'll see if we can roll it here, but Google got assigned. I'll remind you, got assigned at 134, and we've rolled them up all the way to 140, which was the technical area of resistance. We've now broken through that a bit. So I will see if I close my Google calls, either I close my calls at a loss and just keep the shares running a bit. That would be pretty much, as of current price, it would be a $1 a share loss on the call. So I'll see tomorrow. I'll make an executive decision whether I roll the calls for profit, whether I let the shares get called away, or whether I just close these calls at a loss and let them run to next week here, guys. I will see how the market is positioned leading into tomorrow if we're able to recover more of yesterday's dip here. Starbucks have the 99 calls off my 97 assigned strike here. So Starbucks was trading roughly above $97 2 days ago. So I decided to write the 99 calls, got about 23 cents here for them. And now they're pretty much worthless. So I will maintain Starbucks, just lowering my average cost a little bit. And the Tesla 245 puts here that we wrote for $1.44, they are pretty much worthless here. If Tesla closes above 245 tomorrow, well, those will end pretty much worthless here and looking fairly good for that closure above 245 tomorrow. So we'll be able to pocket that premium. So decent little week here in terms of writing premium. And in terms of the swing trades here, guys, you can see swing trades are still intact here. Adobe's still there, Amazon's still there, TMF still there, Oracle still not break even yet. ETH and Bitcoin here. Tiny position here, guys. Need to build this one up a little bit more as the dips potentially do continue. BABA still in those as well. CP now trading nicely above my break even here, guys. So currently up, pretty much $7.25 roughly per share. So very, very good here, guys. Nice little $722 gain on those swing trade positions. Google just explained. Starbucks as well just explained. Got assigned at 97. We wrote the covered call. So my pretty much break even now, guys, is going to be roughly around like 96.50, something like that. Current share price of Starbucks about 95.13. Not worried at all. It's in my buy range. PayPal still not in covered call territory. CSIQ has come up nicely in the last couple of weeks. Still off covered call territory as of currently. My break even on that is $28. And my Canadian banking dividend is still there as well. And you can see I made a cheeky little play here on Nike. We have a bull put spread. I mean, it's a put credit spread here, guys. I got 52 cents for it. In essence, it's a very easy strategy to understand here, guys. What I just did is I wrote the 113 puts and I bought the 109 puts. So it's basically a strategy of limiting the risk. So if it closed below 113 tomorrow here, guys, I will be assigned shares at 113, but the 109 bought puts act as a bit of a stop loss. So I was figuring if Nike really craps the bed here, well, if it goes well below 109, I'll be able to close the long side puts at a profit and just take assignment. So it's going to be able to reduce my average costs. Let's say I bought the long put side was about 25 cents. So let's say tomorrow, if the long side put opens at 108.50, something like that, they may be trading about 50, 60, 70 cents, those puts. If it dips even a bit more into the open. So if I can close those puts at a bit of a gain here, it will offset some of my strike price here, right? So net credit right now is 52 cents. So my true break even would be about 112.50. But if I'm able to lower the cost, if I'm able to sell the 109 long puts here at a bit of a profit, that will bring my average cost a bit more here, guys. But to be honest with you, we're playing with pretty much dollars in the grand scheme of things here, guys. It's pretty much very close to my sweet spot here. In all reality, I could have waited for earnings, but I wanted to make a little play on earnings nonetheless. I don't mind owning Nike in the 112, 113 range. If anything, guys, if it really just continues to dip here, we are just looking for a weekly higher low at this point. Anything above pretty much 104 is going to be looking for a weekly higher low. I do believe the bulls will be able to hold this whole area of congestion together here. And not let the bears truly roll this over. So I do believe in Nike's recovery story into next year as well. I really don't mind owning the shares at that price level. So we'll see how tomorrow plays out. That's pretty much everything I had for you guys today. Hope you guys enjoyed it as usual. If you did, consider dropping a like. It really helps me out, guys, and consider subscribing to the channel. All the way up to 515 subscribers now, guys. I love every single one of you that took the time to hit that subscribe button and appreciate the videos here. And as always, if you have any questions, guys, leave them down below in the comments. Technical analysis, options, stocks, macro, I got you. Just leave it down below in the comments and I'll get to you ASAP. So take care, guys. See you tomorrow, Friday, after the close. Take care and peace.